Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. It's Thursday morning, April the 12th. We are kicking it old school, as I like to say, getting ready to take a look at the markets like we do each and every day. For those of you new to the channel, make sure that you click the subscribe button below so that you get the updates as they come out each and every day. And for those of you that are new, we look at the same 10 to 12 futures markets every day, leaving the lines on the charts because it helps to hold us accountable to our trades. Let's dive in. So starting with the S&P. We're up about 13 points this morning as the S&P is rallying a bit. You know, we had a sell-off at the end of the day yesterday as we kind of hit a resistance area and then sold off from there. Little bit concerned that we've not been able to put in any higher swing highs over the last couple of days. Our higher swing highs have not continued. But this is the definition of chop, right? I mean, if we look back to where we were on March the 21st and where we are today, it's essentially the same spot. So markets are not really giving us a whole lot of directional movement one way or the other, but what we are getting is still extreme swings and big volatility. So for day traders, that becomes pretty good. Now, one of the things I will say is that we are tightening this band up a little bit. We're seeing that our swings are for the last couple of days at least getting a bit smaller and smaller, right? As we have this. This is not a triangle pattern. I would not call this a perfect triangle pattern, but we are definitely pinching a little bit, which typically means that there is a fairly large move on our horizon. So kind of keep an eye on that. As far as our reversal points and breakout points, I don't really have anything sitting here in the S&P that's of much value. Now, yesterday I had talked about that the NQ was getting close to its breakout area. For those of you that follow me on Twitter, I said that the NQ was getting close to its breakout area. We almost broke out, not quite broke out of there. I don't even think we got a full tick above that line. So we just did a touch and go. What does that do to this breakout area, right? Think about that for a minute. What does that do to this breakout area? Well, think about it. Logically, every time we come up to here, we're taking away from the inventory of remaining sell orders. And each time we bounce off of it, we're bouncing off a bit lower. So this looks a little different than the S&P. I would say, somewhere up here above this 6660, maybe it's 6666, I don't know, maybe 6667. Maybe there's a breakout long opportunity in here. Because that's typically what we look for in there. Now, we still have a breakout short down below here because that corresponds with the one that we have in the S&P. But for the most part, we didn't get that breakout yesterday in the Nasdaq. We could still get it. Now, one thing I have noticed is at the end of the week, for the past 3 to 4 weeks, we've sold off pretty heavily on Friday afternoon. So even if we do get a breakout today, just be aware of our Friday afternoon kind of sell-off that's been occurring. I'm getting less and less confident about this reversal up here as we get closer to it. So I'm actually going to convert this to a dashed line. Remember what the dashed lines mean, that they are more of a confirmation style entry. Okay, next, let's take a look at crude oil. So crude oil, we did have a breakout, and the crude oil breakout has occurred, and we've not really gotten any follow-through from that crude oil breakout. So if you caught that crude oil breakout and you are still in, then you're down probably just a smidge, down just a little bit, not a whole lot. But what the thing to remember is that our stop had to go below here because on a breakout, your stop's got to go below the last pivot low. So if you are so inclined and you feel like, okay, well, I want to reduce my risk, you can move your stop up to this 66.44, which would be below this little pivot right here. I think that would be, a place that you could get stopped out pretty quickly. The other alternative is if you're not in, wait for us to start making a move and get long when we get above these highs here. You may have an opportunity to get long when we get above those highs there if you did not join us in the move already. Gold. Now gold, that was a complete flop. Gold came up to our potential reversal area. It gave us a touch and go, and I said, all right, here we go, psych. Price came to the area, came down, and I really felt pretty strongly about this area. I was actually looking at it as it occurred and wanted to send out a tweet that I felt like, okay, well, this has some price movement opportunity down to about 1350. Because that would have been our fair price value area. And the thing I liked about it going into it was that we were unable to hold on to gains. These upper wicks coming into an area is typically a sign of is typically a sign of reversal. Well, we touched it and then came down and then just blew right through the area. So that one definitely failed on us. I'll take a failed gold trade when it's fairly small in exchange for some of the other positions that have been breakout that have continued to run. All right. As far as adding anything to gold, I got nothing to add at the moment. So looking at our bonds, currency, and commodity markets. So our euro level, we have just reached entry on the euro trade. So we got a pretty nice move into it. We've just reached entry and are starting to come back out. Of the second go around, remember we had originally the entry from here and it rallied back up. This is the second go around into this. So your stop should be much, much, much tighter. What I'm going to do now is remove this line because we cannot use it a third time. A third time's a charm. So hopefully you're able to catch the euro the first time through, get some profits on it. Here's another, and we said yesterday to move up your stop. Here's another opportunity. I don't think you'll get as big of a move on it this time around. Looking at the Aussie. So the Aussie, we had a breakout long. This was a breakout. Price came back down in, and boom, that's continuing to run. So that's what I said earlier. I'll take a small stop out in gold in exchange for a nice big runner like what we have going here in the Aussie any day of the week. And then Canadian dollar, we still have our Canadian dollar area in play down here. And then our bond market, we still have our bond market area in play down here. So both of those levels are still in play. Looking at the Great British Pound. So the Great British Pound yesterday, I talked about taking your stop and moving it up. You're probably closed out for a profit at this point. So I'm going to remove this line since you're probably closed out for a profit. But that one worked out to be a pretty nice little move off of that breakout area. The Japanese yen, this level is still intact. As we came very close to it again yesterday, unable to get in, and then sold off from it. So now what it's doing is it's saying, okay, well, this reversal does still exist, but every time we come up to it, I get less and less comfortable with it. And as a matter of fact, the more often this level gets touched, the better breakout candidate it becomes. What I might want to consider doing, and as many of you may want to look at, is this area here for a potential breakdown short out of that level. Nat gas, let me get to my nat gas. So natural gas, we have nothing really marked on the chart. I'm going to move to a 4-hour, a little bit bigger time period on nat gas. And here's why I really don't have much tracked on nat gas. It's really doing a whole lot of nothing. There's really not a lot in there for longer term style of trades. You got to go down to the 15 and maybe even 5-minute charts to find some of these nat gas trades. And these are strong price shock movements in natural gas, one direction or the other. But it gets very difficult to trade these effectively unless you've got a strong reason to get in. And right now, when I look at nat gas, I don't have a defining reason for me to get in on really any of these positions. There was this long right here off of this little area back here in the past. But other than that, I've got no really defining reason to get in. And so I'm going to leave nat gas be for the time being. So all in all, I think that we need to be, once again, as always, maintaining our plans and following our stop losses in play. When you got a winner, let it go. When you got a loser, get rid of it. So it's not a bad thing to do overall. So until tomorrow, everybody, I hope you have a great day. I will see you soon. Happy Thursday.